Well, good morning, everyone, and welcome to Friday morning. It's Stephen Whiteside here from the uptrend.com. In the pre-market this morning, things are fairly quiet out there, but they seem to be positive. Now, we don't have any stock index futures numbers this morning. The exchange has been closed due to technical problems. I believe they have power generation issues. But we can see that on Wednesday, the ETF for the S&P 500 was up $4.66. This morning in the pre-market, it's up another $2.12. And we also know that the NASDAQ 100 ETF is also trading higher in the pre-market. And it looks like most of the big cap tech stocks are also trading up this morning, ever so slightly. One notable move this morning is Oracle, which is down over 2.5% in the pre-market. Now, we knew this week was going to be bullish. It was coming into a long weekend, coming into month end. We also knew that volume was going to drop off dramatically. So the question now is all of this real? If the whole market isn't participating, are these higher numbers real numbers, or is the market going to completely reverse next week? Now, I showed this yesterday morning, but here's the volumes for the NASDAQ 100 ETF. And you can see last week we were up over 100 million shares, and then we have slowly reduced the number of shares traded this week down to 42 million on Wednesday. I would imagine today might be even less than that. A lot of people just take today off as an extended weekend. On the TSX, when we look at the volume for the iShares for the TSX 60, last week we were up over 5 million, and then that has continued to deteriorate this week, where we got down to just 358,000 shares traded on Thursday. Of course, anyone who's long the market, even if you're not participating this week, you are making money as the value of your shares have risen this week. Now, when people come back next week, we'll just have to wait and see if they want to take money off the table and lock in some profits from this week's big gains. Now, like everybody else, we're having a Black Friday sale this week. We did a mailing the other day. If you think you were supposed to be on the mailing and didn't get anything from us, please just drop us an email at sales@theuptrend.com and we'll get that mailing out to you. Now, just a heads up, we're going to be closed this Monday and Tuesday, back Wednesday night to do an update, and I'll be back Thursday morning to do a video. Now, yesterday I talked a bit about 2025 performance year to date, and the Canadian market is outpacing the U.S. market by quite a bit at the moment, even with those big cap tech stocks that all the world is focused on. We don't have any of those stocks. We have Shopify, but that certainly isn't one of those big AI players. Now, year to date, it is the gold sector that's up dramatically. And of course, the gold sector has a lot more to do with the Canadian market than the U.S. market. The S&P 500 only has one gold stock, and that is Newmont. In the U.S., the biggest winner this year is the semiconductors, up over 43%. What's not working? Well, U.S. transports are almost unchanged right now. And then we've got consumer staples up just a little over 1/3% for the year. So those two sectors are really holding the U.S. market back in 2025. Now, there's been a lot of talk about moving averages over the past month or so as the market has come down and found support at different moving average points. When we're trading above the moving averages, of course, all of them could potentially act as support on the way down. When we're below the moving averages, as we are right now for consumer staples, the moving averages can potentially act as resistance on the way back up. And you can see here that we came up to the 50-day moving average for a couple of days, and then on Wednesday we shot up to the 100-day moving average. And then the 200-day moving average is just above, which we got up to back in October. And once again, it acted as resistance. And this particular sector has been making lower lows and lower highs over the past couple of months. So we'll have to see if that pattern continues. Now, the opposite of consumer staples is consumer discretionary. And you can see that recently it came down to the 200-day moving average and found some support and bounced. And so that's the world of moving averages at the moment. Now, in the world of investing, the 200-day moving average is a major line in the sand, and stocks typically trading below the 200-day moving average are considered in a bear market. Anything above the 200-day moving average is in a bull market. And when we look at the percentage of stocks currently trading above the 200-day moving average, you can see that in the US, it's just over the 50% level. In Canada, there's a lot more stocks trading above the 200-day moving average than in the US at the moment, and that's one of the reasons that the Canadian market is outperforming the US market right now. So when we look at moving averages, and this is for the iShares for the TSX 60, we recently came down to the 50-day moving average and bounced. So we're getting a lot less downward pressure in the Canadian market this year than we are in the US market. There is the Vanguard Total Market ETF coming down to the 100-day. That's also true for the Dow, for the S&P 500, and for the NASDAQ 100. They all came down, tested the 100-day moving average. So far, that is holding, and now they're starting to move back up. No guarantee that they're going to continue to move higher, but so far, things are looking pretty bullish on Friday morning. Now, this is a chart of Bitcoin, and you can see that recently Bitcoin started to break down below all the moving averages. And again, on the way back up, they could all act as a resistance. Any one of them could act as resistance on the way back up. And then last up, looking at the Russell 2000, it's one of the areas of the market that came all the way down to the 200-day moving average before finding support. So we got pretty close to breaking that 200-day moving average, which would not have been a good sign for the overall market. Now, one of the things I like to do on Friday mornings is to print off some weekly charts just to see if there's going to be any major changes going into the weekend. And as you can imagine, all the numbers are pretty positive. We've got the S&P up over 3% for the week, while the NASDAQ 100 is up over 4%. The NASDAQ generated a sell signal last weekend, so this could be a complete reversal. I'm not sure how enthusiastic I would be about jumping in next Monday. I want to wait and see how the market starts to trade, given the fact there's very little volume this week. Now, there's the Russell 2000 up nearly 5% for the week. We've got semiconductors up 7.7%. The VIX is down over 25%, sitting on the edge of a new weekly sell signal. If that were to happen, that would be bullish for stocks. Looking at the TSX, we've got it up over we've got it up 3.5% for the week. We've got energy stocks up 0.75%, while financials are up over 2%, while gold stocks are up nearly 10% for the week. And last up, looking at the price of gold itself, we're up $86.20, while crude oil is up 59 cents, and natural gas is down nearly 4% for the week. Still on a weekly buy signal, not expecting a change in trend this week. Okay, folks, that is all for this morning's presentation. So far, it looks like the market wants to do a little buying on Friday morning. Just a reminder, our offices are going to be closed on Monday and Tuesday, so we will do a weekend update on Saturday morning, and I'll do a weekend video on Saturday afternoon. Next time we'll print charts after that is next Wednesday night, and then I'll be back again to review those charts on Thursday morning. So have a great day, have a great weekend, and we'll talk to you again soon.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.